Hey, what's up, guys? This is Brandon from Brands Around the World. So I hope everybody's having a good time. Christmas is around. Christmas just passed. Um, New Year's is today. Today's a Thursday. I'm gonna make this real short because I know you guys want to go out and be with some loved ones. A lot of people are working and whatnot. I know I'm doing a show later on, so we're gonna make this real short, and we're gonna get into it right now. We're gonna touch on what we did last week, and then we're gonna move on from there. Last week we were talking about the emerging markets. No, the markets. We touched on that last week. We were trying to find out exactly the state of the environment of the stock market, how the stock market is plunging, and my stock is still doing bad. I mean, I got Moderna right now, I bought at 126, and it's at 104. I just checked it just now; it's 104. Let me double check again. What's Moderna at? mRNA, mRNA, Moderna, 106 just went up. So Moderna's at 106 right now. I bought it at 126, it went down. So what I'm trying to tell you about that is the market is not crashing, but it's just fixing itself. This is a December. It's a weird month. A lot of things happen at the same time. It's like this diversion that happens at the same time, or collision that happens at the same time. You have Christmas, New Year's. You have everybody wants bonuses. You have income tax coming up. You have the stimulus. And you have bonus performances, and you have the next quarters coming in. So all that put into effect, the market went down. We're into next month, and hopefully next month the market is going to go up. So, but if you notice, what I'm doing right now is I am getting away from high dividends, from high volatile stocks. I'm trying to get away from volatile stock. I want to put like 5 to 10% of volatile stock, but 90% of mine, I want to have ETFs and other. So right now, this show is about dividends. And what is a dividend? First, let me start with what is a dividend. A dividend, when you go to when you buy a share, some companies like Merck, Johnson & Johnson, they give you dividends. It's a payout that they give you every quarter just for being a good customer and being with them. And then they give a percentage of the company, right? They give you aside from their gross that they're making or their losses. So how could dividend work for you? Well, you could substitute your income if you have a good portfolio with dividends in it. The good portfolio would be 20 to 30 companies that have good dividends yielding. And that's what we're going to talk about. I'm going to go through a few of them. I'm going to make this real short and sweet. And I know you guys things to do. I'm just going to put this out there. So my first one for dividends that I have is OUSA. Oh, before we start, let me give you my disclaimer because I'm getting ahead of myself. So let's start with the disclaimer first, so we can see where we're at. Just so you know that I am not a professional. I am a regular person who just dabbles into stocks. I'm making my way through the stocks right now, just to find out exactly, just making money. So I put myself on. So let me give you my legal disclaimer. Legal disclosure, I'm not a financial advisor. The information contained in this video is for entertainment purposes only. Before investing, please consult a licensed professional. Any stock purchase I show in this video should not be considered investment recommendation. I should not be held liable for any losses you may incur for investing or trading in the stock market in an attempt to mirror what I do, unless investments for the FDIC insured. Okay, so now we start the show. So the dividends that I'm working on this week is Merck. Why Merck? Merck is a solid company at the beginning of the year. They have some losses this year, but Merck, I think they put a couple of $1 billion into a Moderna, and they took it out this year. They took their money out this year, so they took the money out this year. But they're a solid company. Merck is going for 83.18. Market cap 208.75 billion. Dividend return is 3.15. So anything over 2 is great. But Merck, which is a solid company, is one of those blue chip companies who's really good. They have a couple of things. I think they just bought a mRNA distributor. They just bought it for $150 million. So that's the play they have. But there are some solid companies behind them. If you look at all the brands that they own, as everything's under their flagship, you see that Merck's a solid company. Market cap at 208.75. So their dividend is 3.5%. Awesome company. Now Merck is down this year, 7% this year, and over the last 5 years, they're up 53%. So look at the record. The record is over the first 5 years, past 5 years, they're up 53%. This year, they're down 7%. I think a lot of it, that chunk of it, because of the pandemic and just people are not buying the way they used to. Second, I got OSA, OUSA. It's OC ETF Trust. Up 50% in the last 5 years. Dividend is 0.06, which is a small, but it's good. It's a good company. PG, which is Procter & Gamble. They go for $138.05, up 10.86% this year. They've been up. The market cap is $341 billion. Now, if anybody knows about Procter & Gamble, that's one of the giants. That's one of the blue chips. Really solid company. Can't get any more solid than that. $341 billion. Anything over 2% is a really good dividend. They're paying 2.3%. So what do I mean by all of these? I'm giving you high yielding, good stocks that are going to put money in your pocket every month. Now, they basically what this dividend would do is every month is going to give you a cash out. Not cash out, but it's going to give you some cash. That cash you could put back into the stock if you want, and you could pocket it, depending on what you do. But you could use this as a source of income that comes in every month. Imagine getting an extra $500 for doing nothing. As your stock goes up and your dividends are staying steady. And these companies, the ones that I'm showing you right now, don't cut down the dividends. There's some companies that actually take the dividends away. I know mRNA doesn't have dividends. Moderna, BioNTech, these companies don't have dividends, so they don't pay out dividends. Home Depot. You know Home Depot. I know Home Depot. We know it's a solid company. Home Depot is one of those companies going to be around forever. Why? Because everybody in the pandemic, everybody stayed home. And the thing that people noticed lately is when they went home and they had the kids, there was a lot of issues with their home. So people started doing home improvement. So Home Depot went out the roof. So Home Depot, $261.72 for Home Depot. Market cap, $282 billion. Shares up 22% this year. Over the 5 years, has been up 96%. Let me tell you that again. Over the last 5 years, went up 96%. This is Home Depot. Dividends, 2.2%. So I'm just giving you some plays that you could do over here, and you could just keep reinvesting that money into your stock and let your money grow. Johnson & Johnson. This is a whale. This is a blue whale right here. You can't get any better Johnson & Johnson. You know everything that's under their belt. They're a solid company. They're $151.55. 5 years, Johnson & Johnson been up 44%. Market cap, $392.17 billion. And the dividends is 2.7. So over 2, that's a solid company. That's one of the dividends. I got some over here that are, let me, I still got my phone on. Damn, Rich. If anybody knows Richie Rich. Hey, Rich, can I call you back? I'm up.
No, man, you gotta talk to me now, bro.
Yeah, I'm doing my live. I'm doing my live right now, Rich. Hey, let me hit you back in a few minutes.
Oh, you on live?
Yes.
Oh, okay.
Yes.
All right, bro.
I'll
see you in a minute. You gonna jump on the live, right?
Yeah, I'm jumping on your live.
All right, bro.
Man, only me. So sorry for that, man. I had to take that phone call. I'm doing another live right after this. So let me do my notes because I'm taking notes and I'm trying to give you information. Now we're going to get to some good dividends. These are the big boys of dividends. This is what I call it. This is the limos of dividends. Exxon, XON, ExxonMobil, $41.06. $143.46 billion. You know Exxon, I know Exxon. But look at the dividends they pay out. 8.43. They give you 8% every month. They pay out of the dividends. Wow. That's some big time money. CVS. CVS is Chevron, the oil company, Chevron. You know Chevron if you have a gas, if you have a car, you know Chevron. The market cap is 162 billion, 0.4. The dividends is 6.10. That's how much they're giving out in dividend every single month. These are something you got to look into. If you're really into just getting passive income, this is it right here. IBM, IBM, International Business Machine, big IBM. IBM is humongous. I mean, if you have anything with a computer, you know what IBM. I've been here for years, for centuries. So IBM market cap is $111 billion on 14 million. Their dividend is 5.56. 5.56 they're giving out in dividends monthly. Hey, what's up, Milano? Roll the tape. What's up? So the dividend is 5.56, which is crazy. 5% they're giving out. Most people give you 1 to 1.6. Man, you're talking about IBM is giving you 5.56, Chevron's giving you 6.10, and Exxon is giving you 8.43 dividends every month. You know, if you have your money put in any of these stocks over a period of years, you could make a good $5 to $6 to $1,000 to $2,000 a month passive income without doing anything as your money rises. So this is a great way to make money if you want a passive income and just want to leave your money there. So the next one we're going to go into now is going to drop off, but we're going to go to Sunoco, which the word for SON, Sunoco. Sunoco, again, a gas. They own a lot of other things, but they have their refineries too. They're doing a lot of things. I know the world is going to EV, electric vehicle, but as of right now, it's not there yet. But everybody still has to pump their own gas, you know. So Sunoco, 5.93, which is a small cap. But look how much the dividends they're paying out monthly. They're paying out 2.93 dividends monthly. Remember, anything over 2, I mean, you eating lovely. Anything over 2 is beautiful. And these guys are giving you some serious money here. So Sunoco is giving you 2.93 dividend. So you have some great companies right now giving some good dividend. And Sunoco is one of those companies that when they give you 2.93 dividend, they hold it there. They don't come back down. They hold it there. So you have SMG, which is the next one is SMG, which is Scott Miracle Growth. Scott Miracle Growth is a fertilizing company. Everybody's had fertilizing issues and so on and so forth. So you know what Scott Miracle Growth is? A nice, strong company. They're going for $197.47 per stock. Their market cap is $11.3 billion, and their dividends at 1.3. So we came back to earth now. We came back to earth. 1.3 billion. No, 1.3 dividend. So if you take all of these dividends together and you start making your portfolio that you rotate some companies in and out based upon dividends and performance, you will see that you could easily make $500 to $1,000 a month, just passive income, just based upon these. So I'm gonna recap them real quick. I know that last month we went over my shares and how many shares I have, and we went over stocks. But this year I want to give you something a little bit easier and something that we can make passive money. If you don't want to get into stock that are a little more volatile, because I do work with a volatile stock, and you want to just be nice and easy, you got some passive income. Passive income is blue chip companies that are really stable. They're one of those that are we know the fundamentals. They know their earning potential. You've heard about them. Everybody really knows when I say Sunoco, Chevron. You know the companies because the companies are good. So recapping, I got 10. I think I got 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 companies that you could easily make passive income. Let me go to my chat and see what Milano, the travel boy. What do you say, Milano? 5.6 is good, but you have to be able to purchase these stocks. Yes, you do purchase stock. You could look as far as the stock, depending as many stocks as you buy, you get more money. But let's say you purchase 10 stocks or 4 stocks. Let's say you just purchase 4 stocks of them. You will receive your dividend coming at the end of the week. I bought Johnson & Johnson, and I think I bought 700 shares. Tell you the truth, I bought a lot. And I think I got like $150 from them. But that's with a margin. I did buy Johnson & Johnson. I didn't know what shares were because I was like, why am I getting free money? What's this? And then I figured out what margin was. When I found out, I'm like, oh, you give me money for just buying this outside of the money I'm making. So, and then when I found out you could have a passive income, and the passive income you can make up to whatever you want. But the passive income could be really nice. They can substitute your wages. I mean, some people can make $1,000, $2,000, depending on how large the portfolio is. And you start small. And think about it, right? If let's say you have $10,000 and you put in one of these big boys, right? You put it on. Let's say you have $10,000 and you put it on Exxon at $143, and Exxon keeps going up because gas consumption is going to go up. Once this COVID-19 goes, gas consumption is going to go back up. specifically when people got to go back to work and people got to go and people are going to feel free. So gas is going to blow up, right, for this immediate time. When Exxon goes up and then let's say they go to $230, so you would have made money, and at the same time your dividend is going to increase too. So now 10,000, maybe 15,000 by the end of the year if this COVID thing is taken care of and all issues are being taken care of. But let's say you put 10,000 on that, you put 1,000 on Chevron, 200 on IBM, 600 on SMG, which is got Miracle Growth, and you put it on some good solid companies. Well, every month you're going to be getting a substantial amount of money coming back. You could make a $500 every month just off these stocks. So let's say you have 20,000, 20,000, and you get $300 back every month. Just to have. Now you could have the 20,000, you could have it in the bank, 0.2%, or you could have it growing for you at a much higher rate. At 0.2% or you at 8%, it's completely different. So you can make $400 or $300 a month just by having the money there. And outside of the growth, because right now everything is stagnating, right? Because the corona and the environment we're in. But once this thing gets unleashed, like the corona's taken care of, or we could handle it, and we're going back to work, and everybody else, the restaurant workers could go back to work. Malls are opening, eateries are coming in, restaurants coming in. People are going to start moving around. Then they're going to need gas. The only reason these numbers are low is because nobody's moving, and there's no urge for gas. There's no need for gas. But once gas comes in, man, it's going to be crazy. But what I'm trying to give you another option, another way to eat, because we're at the table and we got a lot of way to eat on this. You have your regular. I do volatile stocks, but you got some great EVs, which are electric vehicles. You have the pole, which is Beam. You have a lot of different ways you could put it. You could go that way, or if you don't even want to do that, you could just take this right here and say, you know what? I want my money in some blue chip that are really good and they're going to pay me every month and I'm going to grow with them. With this, you just could do it. So if you, and I'm going to recap it real quick. Let me see where I'm at. So I started with some great ones. OSA, which is $38. They're paying 1.6 dividends. They were up 50% in the past 5 years. OSA, OUSA, and I'm going to put it down in the link because I'm going to put it down in the link so you can see. OSA, $38, up 50% in the last 5 years. ETF is an ETF. The ETF OSI Trust, it gave them 1.6. You have Merck from Merck Company, Merck Pharmaceuticals, a big company. You know exactly who they are, Merck. You have the market cap at $208 billion. They're offering 3.15. 3% Merck is offering. A solid company offering 3%. I'm going to do that, Simon. Simon said you should type the tickers you talk about in the chat. I'm going to do it right afterwards. I'm going to go and type it up. Merck is offering 3.15%, which is crazy. Anything over 2% is really good. Think about it. The bank, if you have $10,000 in the bank is giving you 0.02%, and he's giving you 3% on your money every month, as long as you put your money with them. It's a no-brainer. So after that, you have Procter & Gamble. You know what Procter & Gamble is, a proven company. Procter & Gamble. Right now it's going for $138.05. Market cap is $351.39. And they're up $10.38 this year. They're up 10% this year. 2.3 dividends of 2.3. Home Depot, you know Home Depot. Home Depot is going for $261 a stock. Market cap is $281.76 billion. Shares up 22% this year. Shares are up 22% this year because everybody's staying at home now and fixing their homes. Over the 5 years, it's been up 96%. 96% Home Depot went up within the last 5 years. So this is a proven company. It's a winner. Home Depot is giving you 2.28%. 2.28% they're giving you if you buy some other stock. You could only get 6 stocks on Home Depot, and they're still going to give you 2.8% off that. So that's a great way to come in. Johnson & Johnson, Blue Whale, big boy. Johnson & Johnson, 151 over the last 5 years, are up 44%. They're up 44% over the last 5 years, Johnson & Johnson. Market cap, $392 billion. So, you know, they're steady. They're doing a play on Moderna. They're getting, I think, 200. They're giving 100 billion Moderna pills for the Moderna thing, and they're in that fight too. But they're so big they really don't need Moderna because there's so much stuff on the catalog and on their books but still, big boy. They're offering 2.7 dividends monthly. Now we go to the big boys. The big boys. We talking about the whales. This is Exxon. Exxon is at $41.06. Let's say you buy $300 of Exxon, you're gonna be getting 8% of that back. Exxon market cap $173 billion. Dividends is 8.43%. 8.43%. Chevron CVX. Chevron's $84.19 for a stock. Market cap 162.4 billion, and the dividends is 6%, 6.10 to be exact, 6%. Mine 8 to 6. This is crazy. Some crazy. Anything over 2 is good, but now we're talking about 8 and 6, crazy numbers. I mean, you got 30, 40,000. You put in this bad boy, and you can live for the rest of your life. You can eat really well. This could give you $400-500 every week, every month, just a passive income. And as it grows, your portfolio grows. You just keep putting the money back into it, and it's a beautiful thing. You could eat really well just off these right here. IBM, you know what's IBM, International Business Machine. They're going for $124 per stock. Our market cap is 114 cents, and the dividends they're paying out per month is 5.6%. Crazy, 5.6%. SMG, Scott Miracle-Gro, 197. They're on the low side. They're 11 billion, and they're 1.23. And we're gonna go to the last one, Sunoco, which you see that the gas is paying. Gas is paying. That's where the money's at. That's a sweet spot. So if you find a sweet spot, man, you better go and get that. So the thing is that they're diversifying all over, and there's other companies that could put in here, and you could. And it's up to you. It's up to your tolerance and your preference. You may not want to be able to have your money so strong or so concentrated in just the oil sector. So you might change it around. You may get EVs and other things, Johnson & Johnson, which is pharmaceuticals, Sunoco, which is the oil sector. But Sunoco is a $5.93 billion, which I'm pretty sure that's going to move up. And they're giving 2.93, almost 3% on that. So I'm going to read some of the comments, and I'm gonna make it real short this week, man, because I know it's the new year. Everybody wants to do their stuff. Everybody's enjoying themselves. Please enjoy yourself, drink responsibly, and drive safely. So Milano, what else you put? You put shout out Panama. What's up, Milano? But only dudes with big money stuff. No, it's us too. It's us too. A lot of people got their 401ks and money, a little bit of money aside. I mean, they're about to give you $600 from the your boy from the stimulus check. Put that boy in here and let it grow. Act like you never had it. You put in this company, the company will keep growing, and you will always have money. You have I hate paying. Sam, we all do. What's up? So I should type the ticker. I would type it in the ticker. Leaving money in the bank is no use. Yeah, it's useless, really. Dímelo, Branjo, let's get this money. That's what's up, man. Gage Nation, that's what's up. But that's some of the tickers that I'm going to put it on the ticker earlier. I just jumped on here because I want to make sure I kept consistent and do this every Thursday. Talk about money and a good way we can make this money, man. For real, a lot of people don't like the stock market and the volatility in the stock market, and are scared of using the stock market. They don't know what a stop loss is. They don't know what stop limit is. They don't know buy high, sell up, buy low, sell high. They don't know none of that, nor do they want to, nor they should. Whatever your comfort level, that's where you have to assess your threat or assess your situation. And my thing is this: if you want to just have passive income, you want to make sure that your money grows and you don't have no volatility. You want to put it in dividends. You want to put in high dividends, so someone's going to give you dividends. Dividends is money is going to be given to you monthly. Mind you, there are some that give it to you yearly. Disney gives it to you yearly, but they suspended theirs because this Disney, they could do stuff like that. They big balling. But Disney went up from, I think, 117 to 175. So they made like a $50 jump within 3 months. So you would have made some serious money if you just played the dividends. 3 months, they're going to just put it on Disney, just on the dividends. You would have made $50 off that, off every share. If you had 1,000 shares of that, you would have got 5,000, I think. Do the math. I'm lousy at math, I'm finding out. But what I'm saying is, if you want another passive way of doing it, because at the end of the day, what we all want to do is we want to retire. I want to eat off a passive income. I don't want to touch this money because at the end of the day, we have Uncle Sam taking care of us. And if you go to DR or Colombia or Peru or whatever you want to be, you want to make sure that you're gaining money while you're not working. And this money is going to be working for you for the rest of your life. So why not put it right now? You can just start every month. Just do one company. You don't have to do all of them. Just do one company every time you have a paycheck. Let me put a little $300 there. Look, even if you put, look, I'll give you the cheaper ones. The cheaper ones that I have here, you can put it on. You have Exxon, XOM. Exxon is $41.06, and they're paying 8%, and they're only $41. So let's say next you got the little stimulus check, and you put the 600, and you split it. You say, you know what, I'm not gonna, throw the whole thing in there. You whatever's, I should divide it that. But you take your stimulus check, you buy Exxon. Exxon right now is $41.00 because remember the pandemic made sure that nobody's going to work lately. Nobody's moving. That gas is not moving. So right now Exxon is low. But once this thing comes to an end and we get to live with it, we understand what it is, we're going to go back to living a regular day. We're going to be burning gas. And that number 41 is going to shoot up. Maybe 100, 160, and your money's going to shoot up. And then your dividend's going to shoot up. So that $600 in a year could be worth $12,000 to $2,000. That's in a year, maybe a year and a half, because we're buying low, and we're going to, well, hope you don't sell. You keep it. You're an investor. So that's what I'm trying to let you know. We could do it all through this dividend. It doesn't have to be a stock thing. You could do it through dividends. You could have enough dividends every month that you put it on that when you look around, you're making $500 without even thinking about it. And then you turn it and you put it back into your stock. And all of a sudden, in 5 years, that stock is now worth $1,000. Now you're eating off $1,000, which you only put every month, every 2 months, you put a little something on a dividend stock. That's a blue chip stock, and now you have $1,000. Now you decide you're gonna retire, or even you know what? I'm not even gonna work because I'm working making $600, which my dividends pay me $1,000. So why should I be doing that? Let me go up here to DR and buy one of these little huts and stay out here for $1,500, and then I got $1,000 coming every month, and I'm living like a king. At the end of the day, this is what we're trying to do. We're trying to get passive income. Let somebody else work for us, man. Let the doctors at Merck, let the scientists at Exxon, let somebody else work for us while we just put our money in it and have you do the work, and then you give us residual off that. And if this is how you want to eat, this is another option for you. And I want to make sure that you knew that this option was out there. And I gave you 15, but this is at least 100, 150 you could do. I didn't put Disney up there. I didn't put a lot of people up there. I put some things, I try to diversify. Like I said, I went to Exxon at $41.06, and their dividend is 8.3%. Chevron, right? $84. Their dividend is $6.10, the percentage they give you out. IBM, you could buy it $124. You get the little extra, you little check, or you get your check for $600. You throw it up in there, and you got that. Next month, you get $300. You throw it up in there, boom, you got that coming in. But every month you throw a little something in the pot, and you're gonna see how the pot makes soup, man, real quick. Now you eating off ribs, short ribs, you eating on steak, you eating on something else instead of just sucking on bones. You eating on something. But this is how we live. And I want to make sure all my people live, man, because my thing is, man, if I can get it, you can get it too. I'm gonna make sure I throw crumbs out there so everybody can catch it. But that's up to you. This is Brand George. I hope everybody's enjoying this. My thing is, man, let's go and get this money because there's free money out there. Rome wasn't built in a day. We're not gonna get rich in a day. Look, at the end of the day, everybody wants to go to different countries and do their thing. And for us to live the way we got to do, we got to be responsible. This is a good way to do it. So, hey, I'm glad for everybody be here. I did my little 30 minutes. I was gonna jump in only for 15, but I did 30. I just want to put that out there, just stay consistent. But I just want to make you know that there's another way to do it. I mean, you have your options, you have your Bitcoins, which is a thing I want to talk about next. I want to get into Bitcoins too, because that's moving. That's going to be the way of the future. All the big boys are saying that Bitcoin's going to go 19%. It's going to increase by 19%. So if that's it, I want to get in. I got a couple of boys making some money on that, making some moves. So that may be something I want to look into. I know Bitcoin, I'm interested. So now you got me interested. I'm coming in pretty soon. But there's other ways to make money. That thing that you working 9 to 5 and never getting ahead. Yeah, you can keep that up, but how long is that going to last you? You got to let other people work for you, make that money for you. So this is a slow growth, but it's a growth. You can't stop something that's moving. And if your money's making money for you, that's a beautiful thing. You can't stop something that's moving, even if it's crawling. You can't stop something that's moving. And we got to start moving, man, because at the end of the day, everybody wants to live that life, man. So, hey, thanks for everybody for being here. I appreciate you. This is Brand Joe with Stock Talk. This is my dividend portfolio Stock Talk. How we can make it. Hope we can do it every week. Hope we can start one just on dividend. I would love to start one with you guys that we check on our dividends every week. I'll probably try to do like 5 minutes out of dividends. Put dividends on the side. Make sure that we and you know what? That's probably every 2 weeks. I'm gonna put money on dividends. just so we could start doing that and constantly keep getting that ball rolling. Because once that ball rolls, it rolls real quick in 5-10 years, man. Next thing we know, we living in DR in a luxury penthouse. Talking about, you don't know me? Yeah, I don't know you either, man. Well, move out my way. You're blocking my view. Stop playing. Do me a favor. You pass me the Presidente? All right, good. That's how you want to be living. And this one do it for you. So, hey, I hope you guys appreciate it. I appreciate you guys being here. Thank you. This is Brand Joy. Stock Talk.